What's up, everybody? Wanted to make a daily recap video, go over a couple trades from today, as well as just talk about some different things that are on my mind. Kind of a random video, maybe a slower paced one, but just wanted to talk about perspectives. Like different people have different strategies, different perspectives, and how those different perspectives kind of line up and affect each other. And I wanted to, just kind of think about if I do share strategies or do share my exact strategy, how does that affect things? Would I even see an effect? What type of effects could there be? I kind of want to just, as a thought experiment, just think about some different things like that and talk about those things. Okay, so for something like GNUS, you would look at it, and what's been happening, this has been consolidating for a while. So on the multi-day, see it's been consolidating with some nice, this is a symmetric triangle formation, or just basically it's holding a horizontal range. It's not really a clean symmetric, it's more just like you can clearly see it had a surge into this price range and it's holding horizontally for multiple days. Whenever a price holds, that's worth watching because it could then continue. Not to mention there's a clean trend here that broke, so just some things to think about. Again, like I'm not a swing trader, but you can definitely see how some of these different entries suggest a swing entry, depending on where you buy and kind of its development. This is very washed out, so from 1150 to, I went all the way back down to $1. Yeah, and that was back here. So this took a very long time to kind of find the uptrend. I mean, this technically, if you want to get really technical, the bounce started right here actually on 1111. So I mean, the swing entry for the bounce, that's pretty far gone, but, or what I should say is the most optimal swing entry. But clearly you can just see how these formations work, and you can definitely see how you can start to time entries strategically and make a game plan strategically based on this price action, this TA. TA is technical analysis, which is the way the candles look on the chart. Okay, so, and what am I trying to really even explain here? What am I trying to get to? So if everybody sees this consolidation and has the same types of thought processes, then perhaps as it confirms, more people are going to jump in and push the price here. So maybe if everybody has the same idea behind something, as a collective, perhaps it helps everybody in certain cases. Because everybody jumping in, maybe that is enough power or enough energy to create that emotional response from the rest of the market, that whether it's shorts, whether it's longs, it's creating an emotional response from other people, which creates the continuation. So, the debate that I've had for a very long time is, does it benefit me to explain to others my strategy? Is that a benefit to me, or is that something that I want to be careful about? Usually in games, it's best not to share strategy. For example, online poker, like 5 or 10 years ago, it was incredible for making money because there wasn't a lot of strategy out there, and it was very popular. So a lot of new people were coming in. I didn't even play back then, but apparently it was the golden age. Just because you could kind of, if you were a hardworking person, you could definitely design your own strategy and get really good, and the resources to get better just weren't there. They weren't open, So the pools of players that you were playing against on average were not strong. And so in trading, it's very similar as far as you don't want the pool of traders you're trading with to be strong. I mean, it's just logical. It's just logical. Like, it just makes a lot of sense. You wouldn't want the people you're trading with to be good at trading. You just wouldn't want that. Because you would want to have the edge as far as knowing where to take the entry, knowing where the appropriate sell is to lock in profits. Like, you would want to know these things. You wouldn't really want anyone else to really know them, because that could cut into your edge. And I'm not trying to discuss morality here. I'm not trying to discuss like what's right or wrong from a moral perspective. I'm just trying to think what is the most logical reasoning, or the most logical conclusion as far as what is the smartest thing, to give away strategy or to not give away strategy. And I just don't know. I mean, perhaps everybody working together in certain entry areas, the collective could cause a bigger response from like bigger players that could actually help everybody, again, in just certain cases. Now, the situation where that may not be true is like, let's say, this isn't maybe the best example, but let's just say, okay, triangle formation, okay, it's been consolidating for a while. Maybe this pattern's been working quite a bit lately. The symmetric triangle formation, and it could be a situation where everybody jumps in expecting it to break out of the triangle and continue this uptrend. So everybody jumps in, pushes it. We all jump in. We're surging into 175. But perhaps this setup has been working too often lately. So often that maybe somebody who's stuck on the long term, maybe a long-term shareholder, or maybe a swing trader, and let's just say entered in the 120s, and maybe they don't think it's going to be able to break out over 2, and they're up a lot of money, and maybe they want to lock in profits. Then if they are aware that this pattern's been hot lately, then maybe they let it consolidate and let it set up, and then they put their massive order, and it's like a hidden sell order. So then we all surge into that hidden sell, and maybe that seller is so massive, that player who's a big swing trade player, maybe he's so massive that we don't take him out. And then all of a sudden, we're sitting here, a ton of volume surged, but the price doesn't go up. Now, if everybody's strategy is to buy the breakout of the triangle, risking like the key support, which is what my strategy is, what happens if we're all using that strat and it doesn't find a strong uptrend, and it starts to come down right away as a trap? Well, then maybe we're all going to panic dump at the same time, and you better believe we're not all going to get that nice break even or small loss exit. And you see that from time to time. Certain patterns will work for a while, and then all of a sudden they become fake outs or traps. where you'll get these surges, it'll look good, and then it'll just like reverse dump, and it's like, how did that happen? And for the most part, it's because too many people had the same thesis. Too many people had the same strategy going into something. And somebody, a big player either countered the strategy, or the overall thesis of the play just wasn't that strong, and people perhaps bought in too much into the technical analysis. Like, they ignored the other factors and maybe just saw a triangle and they're like, oh, I'm gonna buy a triangle. And then if it's really not that strong of a thesis, then it turns around, maybe dumps once everybody gets kind of trapped in and the price doesn't really go up for them. So, it's like, it goes both ways. Like, I'm sure in some cases it helps, in other cases it doesn't. Not to mention, there's so many stocks on a day-to-day that you can trade. Then I'm just saying to myself, like, there's so many stocks and there's so much liquidity. I usually take maybe 5 or 10,000 shares on a play like this, and each minute during these hot surge periods, there's like 600,000 shares. So at the same time, if I share the strategy I'm using, I would never want to take positions that big anyways. I kind of like, even if I scale up and take 50,000 positions, that would still be years down the line. And even with a 50,000 position, there's still plenty of liquidity there for other people. So like, I flip-flop all the time whether I want to give away strategy or not, and I'm not sure. The thing I would say though is that all I really did was just look. I looked at TA that works, and then if it works a lot, I just keep playing it. And if things shift and change a bit, then I shift with it. I always adjust with it. And it's like, nobody told me this stuff. I taught it to myself. As far as the very specific strategy that I have, I taught it myself. So if I did it once, I can do it again. So it's like, even if things shift and change, I'm a detailed-oriented person. I pay very close attention to detail. I could absolutely just kind of scale back a bit as I'm feeling things out and getting used to what's working, and then I could just play that. And it's like, the thing that I'm teaching though, it's not just a pattern. It's learning how to trade. Like, it's learning how to trade price action. It's so many things. It's so hard to put into words. It's not really an exact technical analysis setup. It's just learning how to trade flow. Flowing with the market, moving with the market, adjusting, then using kind of short-term micro setups that correlate with those bigger setups. And it's like, there's so much that goes into it that I really, even if I do give very specific strat, people would still need to put in a ton of work to refine it and get to the level that I'm at. So at the same time, it's like, it probably just doesn't matter that much. The reason why I even debate this is because I've helped so many people. And I've helped so many people at this point that my conscience is it's fine. It's like, I've given back to so many people, and I love that I've helped so many people get better and improve and be consistently profitable now, and that's great. That's absolutely awesome. But at that point, it's like, alright, I've given back to a ton of people. I feel good about it. Like, my conscience is pretty clean as far as in that regard. I do feel like I've given enough back now that I'm like, hey, time to focus on yourself a bit, time to get a little bit better at what you do, and zone in a bit. There's going to be a time and a place to help more people, but for now, I'm happy with the amount of people that I've helped. So I also, I have that feeling as well. So, look at this, HGen. Wow, that was a great setup. Look at that. Just a beautiful consolidation right there. Absolutely perfect for an entry zone. Look at that entry zone. Say something like 1033, risking at 1022, 10 cents of risk for over $2 of upside. You're looking at 20 to 1 risk reward ratio. And that is what I specialize in. Specialize in risk reward ratio. That's why I don't have to be right that often. And I make a ton of money. Because I understand what makes an entry. I understand what's an appropriate entry, what you have to risk. Then I stick to the plan, you let it roll, you make money. This is what trading is. Take an entry zone around 1002. You have to risk the key support in the 990 area. It holds the key support, finds the uptrend. That's about a 4 to 1 risk reward ratio. That prints money. I'm not saying you're going to find the exact top. Even if it kind of starts to get weak and you sell it here, still pretty reasonable. 20 cents of upside for 10 cents risk. Actually, 984. Yeah, it was about 10 cents. Yeah. So look, the combinations of different things that you can do with TA is pretty crazy. You can really develop any strategy that you want, obviously, and you look at the long-term chart on HGen. Again, it's just like another type of TA pattern where perks a bit, it perks here. It's like, okay, give a really nice uptrend, 9 to 1080. It pulls back for 5 days, finds some kind of horizontal support there, and then as it breaks out of this downtrend, forms some really great intraday TA that correlates with this multi-week pattern and setup for the continuation, the flag over the previous high, which happened to go a lot higher than I would have expected. So this is what it's about, and nobody, I can explain the nice TA on the intraday to people and explain what they can begin to look for, the different factors they can look for, the different things to think about. There's so much I could go into, and I could help a ton of people, and there's still certain factors that I'm not willing to openly talk about, but look, I don't even know exactly what I was going to say. Besides, I think I was going to go along the lines of, at the end of the day, you still have to work harder than ever. Like if you're a hard worker, you will get this stuff and you'll succeed. But if you're not an active trader, you're going to have a really hard time. So if you're not just like pulling random stuff off scans just out of pure curiosity, to just kind of like look at stuff, see how it's flowed, look at the multi-day. Oh, it gapped down. Why did it gap down? Oh, it announces an offering. Oh, let's look at the history. It's been like washing. Sometimes it has gap ups, but for the most part, it's kind of a gross stock that seems to just find new lows. Like, oh, okay. Like the point is, you want to keep thinking to yourself and keep looking at different time frames, different flows, anything that you can do. Just take a look. I mean, really, that's what you want to do. Take a look at MLSS. It's like, oh, it's not that good. It doesn't really have any huge days. I mean, it's had a couple, like this one from 208 to 250 was pretty cool, but in general, not a whole lot goes on with this. So maybe not something you would want to focus on because, well, historically speaking, it doesn't have big moves, and even if it does, it usually takes a long time for it to really realize that full upside. It's like, why not just focus on something else that actually has a history of spiking so that you can go ahead and make the most out of your time and energy, right? So these are all things to think about. Now, at the same time, I'm still going to take a look at this tomorrow because, you know what? It has had some good consolidation recently, and yeah, if I do enter it, it would probably just be for a quick scalp idea, something like that. But let's say tomorrow gets some really nice structure, some clean structure. Hey, maybe I'll try to scalp it, see if I can get a 250 test tomorrow, and just get a nice scalp out of it. Like there's all sorts of different things to think about in trading, and you know, the better you get at trading, the more tickers you can watch. The better you are at managing your time. The decisions that you make are more precise. And so that, you know, I'm at the point in my career where I can watch something like MLSS tomorrow and maybe get a nice scalp out of it, or maybe I just won't touch it. And either way, it's not really going to affect me in a negative way. Whereas maybe a new trader, I would just tell them, don't watch it at all. So, you know what I mean? There's just so many different, so many things to think about in trading. As far as like where you are at as a trader, and what's going to help you the most. In some cases, just not watching the stock is going to help you the most. CRTD was kind of interesting today. Super low volume, but I noticed that it's kind of breaking out of this little downtrend. It had kind of held that support though, and now it's kind of perking. It is a former runner, went from 275 to 410 before, and I noticed it doesn't have a long-term chart, so this is it might be what was it, a fresh company or something? I'm not sure. I can probably find it real quick. Okay, so it's a new stock to NASDAQ. So again, not that exciting to like read news and go back all the way and take a look at all these little PRs and try to figure out what's going on with this. It's not fun, it's not entertaining, but the more you do it, the more you'll just kind of feel natural and comfortable with these things. So, you know, I'm not making these videos for pure entertainment or anything special. I know really my videos are trash as far as the editing sucks. My videos are boring, usually slow, not entertaining at all. They're just kind of to help people. Like if you want to learn trading and want to like sit through my boring rambling, then you know it might be helpful. But I don't really expect these to get crazy amount of views or anything because I'm just not. I don't care enough to edit them like crazy and bring this fake bubbly personality. You know, I can't really be bothered to do that anyways, and that's what you need to make it big on YouTube. You have to like basically, you know, make super loud content for children. That's really what does well on YouTube, honestly. Alright, so just been really thinking about this HUSN. It is a former runner. It's very washed out on the multi-year, from 25 down to the $2 area. Okay. Interesting. I can see this doing something. It's 3.5 mil float. It's been making a higher low uptrend on the multi-week. It's breaking out of the trend. It started to perk out of it today. It's got a nice thing going as far as it's kind of like a bigger picture downtrend too. So it's like a multi-month type of downtrend. It's kind of interesting. Could find a nice pump, maybe hit 4. something like this, it moves $1 a share. I mean, what, you take 2, 3, 4,000 shares and make $2, 3, $4,000. I like that, right? Could happen. We'll see. Again, with everything that I kind of look at, what's the most important factor? Probably the intraday TA, right? It's like it has to have a really nice setup on the intraday so that I can time an entry, know exactly what my risk is, have a really solid game plan. That's what creates consistency, so that's probably the most important thing. But it's nice to be prepared for it. Like, you know, if it sets up, I'll be there. I'll be ready. ELYS came out with a filing after hours. The owner scooped up around 50,000 shares. He bought those in the low threes, which is very bullish. Okay, it's a very bullish news. What we see is it's a hot stock recently. Okay, so again, when it comes to this TA, you get this downtrend TA, breaks right out of it. Okay, so that's kind of a really bullish move. It's bouncing. Okay, so maybe in this area, people see, okay, it failed this trend. So maybe this is where some people started their short positions, right? Short in here, short in here. They're looking for that move back down because it's a shit company, most likely. What happens though when it's able to hold the range, doesn't dump, it just kind of holds here, and then the owner comes out with a 50,000 share filing that he just scooped it up recently? That's a big uh-oh. That's an uh-oh for shorts, and that could cause a short squeeze if shorts got heavy in the name, which I have no idea. You know, there's no way to really know. All you can do is watch it. So tomorrow I'll be watching it. It could do one of these. Okay, maybe shoot up to 4 tomorrow. That's what I'll be looking for. So that's kind of the logic in how I trade. You look for different TA that combines with different price zones. You look at how the market reacts to the price zones. You look at the different news that comes out in different areas. You look at all these factors, and you think about them a lot. And over time, they become second nature. CBDR has a push after hours. Really like this TA. Now, could you have scooped something off this double bottom? Sure. Sure, would have been fine. I mean, you get a nice bottom here, you get a nice bottom here. Get a nice wedge. You could buy the continuation off the wedge, risking something like 176. So you get in at 179, you risk 176, that's 3 cents of risk. You let the play roll. If it starts to work for you, you just hold patiently until you hit your profit target. And as you can see, you're risking 3 cents for 60 cents of upside. That's 20-to-1 risk-reward ratio. That means you only have to be right one time out of 20 and you will break even. If you're right any more times than that, then you're just printing money. So that's why these setups, these precise, on the 1 minute candle, very precise TA setups, this is why I use them, because you get the best risk reward in the game. You buy this, confirms to the upside, buying at 196, risking 191 area, that's 5 cents of risk. You get this surge, even if you sell it right away. Let's say you have no patience, you're scared, you sell it here in the low, you know, in the low twos. Let's say you lock it up around 210. 15 cents of upside on something that was 5 cents risk. That's 3-to-1 risk reward ratio. You only need to be right 33% of the time to break even. Think about that. Just think about that. Just think about that for a second. You only had to be right 33% of the time just to break even. It's a pretty good strategy for not that good at trading. Higher low, this is an ascending triangle. You get in 214, risking 210 area. Preferably, it would be like 211. So that's 3 cents of risk, 15 cents of upside on 3 cents of risk. That's 5 to 1 risk reward ratio. That means you only had to be right 20% of the time to break even. If you're right any more percentage, that's money going into your pocket. Okay, so like just analyzing this TA alone, I literally just pointed out 3 plays that set up that were appropriate, that you could play just based on your personal preferences, your level of comfort, things like that. Okay, now did I play any of them? No, I didn't, because I'm not that comfortable in after hours moves. I could have. You know, if I was grinding, maybe I was in the zone, wanted to take some action after hours, sure, I could have done it. Okay, but trading's not about catching everything. It's about doing what you're most comfortable with and what you're most consistent with. And those tickers, those time frames, those opportunities, you're going to know what that is for you, you know, when you get enough experience. And for me, you know what, after hours pre-market, it's just not really my thing. Maybe I'll get better at it someday, but again, like, it's just getting to the best level of trading is kind of just not caring if you don't catch moves. You just don't care anymore, and that's important. It's important to not care and not let it get to you, because this isn't what trading's about. Trading's not about nailing everything and getting filthy rich. No, you know what trading's really about? Just being consistent. Getting consistent, having a strategy that is not risky so that you can be in the game for decades, right? That's really the end goal of trading, just being here every day and being able to do this for a living for decades because we love what we do. That's what it's really about. And look at that, making new highs. It's a nice one. Take a look at that long-term chart. Okay. Doesn't make a whole lot of sense to me. The after-hours surge was very interesting. I do see that it had this perk, and then it kind of made this channel, but still kind of an unusual channel for it to come all the way back to original support. That's kind of strange. I guess it was kind of a hint, though, that the time before it did the exact same thing. Perked, came all the way back down, curled to new highs, came all the way back down, curled to new highs. Kind of an interesting thing. This ticker has done this multiple times in the past as well. This one didn't go to new highs though. Kind of weird. Kind of weird. But again, did you pick up on those details before I said it? Because this is what you got to do as a trader. You got to just analyze like, oh, it likes to perk. It likes to come all the way back down to support, break out of the wedge, and then perk again. And it's like, it's something that happens all the time with this ticker. Right? It happens all the time. So no, I'm not suggesting that you could have really guessed that this was like a good swing or anything. I'm not really suggesting that. I'm just trying to point out again, think. Keep thinking. Keep looking at details. Keep analyzing things. That's all I'm saying. Alright, I'm going to quickly go over the trades that I made the most money on today, which was Seal. Alright, so Seal is a long-term chart setup. So what's happening with Seal? It's a former runner. Okay, so it is capable of having some nice spikes. It is capable of having some nice multi-day moves, multi-week moves. So really what got my attention was this setup. Okay, nice consolidation, breaks out of it for a first day surge. What happens on day two? On day two, it holds gains, right? So what you end up having, this is a 3-minute flag setup on the daily. So it starts to push, okay? Tests that high and it breaks out of it and it surges to new highs. I like to call it a 3-day surge setup, but really it's just like a 3-minute flag or even a micro triangle setup. There's like so many different names and ways that you can think of this stuff. It's totally up to you what you want to call it, you know. And technically, the best trade on this was a swing entry in the low ones, around 101, 102. Technically, that was like a really nice swing entry. So really, this is just the continuation of this entry right here. This entry right here, okay, is this play. I mean, it's the same play. It comes from the same thing. So it's like, if you're confused as to why I was watching it or how you would know to watch it, always look at the long-term chart and see what's going on with it, because usually the answer lies there. I didn't do the best job of playing this. I did buy it here. So I bought it here and I got impatient, okay? I got impatient, sold it at 122, locked up 100. I just didn't like the feel of it, didn't feel as strong. It did end up kind of, forming some higher lows here and then kind of retesting this range. Had a beautiful entry zone. I was just preoccupied with some other things, didn't see it. So like 122, 123 area, hit a nice surge, about 10 cents a share. That was pretty nice. And then later in the day it curled. And this is where I started to scalp it a bit. Can't remember my exact entries. I'll tell you my biggest play on it though, which was this one right here. So I bought this micro pattern right here, the breakout of this micro triangle. You could think of it like an ascending triangle. You could think of it like a symmetric, okay? Either way that you think of it, the structure is there, it's very clean. You can get a precise entry. And I was using level 2, basically as that 138 was getting chipped away, I waited for the 138 to get, basically you want to wait until it looks so chipped away and so weak that you need to buy it or you're going to miss it, right? That's kind of what I try to wait for. And I was able to get 10,000 shares. And then it surged up. When I buy something like this and I get the surge, I'm going to try to risk, break even if it's possible. So what I would mean by that, let's say for 4 minutes, it's just kind of holding this price range, and then all of a sudden, let's say 100,000 shares pops up at 139. Well, then I'm going to instantly sell into the price that I bought it at and get out break even. If I don't see a large bid come in, or I'm sorry, a large ask, if I don't see that come in, then I'll just keep holding and waiting for my plan. And as long as there's not like a huge dump of volume that's just like surging into 138, I'm just going to hold and see what happens. And in that case, if it broke 138, then okay, I'll cut it, I'll get out at 137, I'll lose $100. It didn't happen though, it held up for me and found a nice uptrend, and I ended up selling it at 146, and that was an $800 profit. Very nice play. And I didn't stick around because quite frankly, this is getting very overextended. I wasn't gonna, I never go for home runs. I just lock up my $500 to $1,000 on my scalp on my structure, and then I just wait. If it holds gains and forms another structure, I'll just re-enter it. Very simple stuff. The reason why I use a scalp strategy is because it helps me stay precise, it helps me stay sharp. I prefer it. It's not for everybody, but I prefer it, and I'm good at it. So that's why I do what I do. The other play was, what was it? So the thought process on this had some pre-market news. It was a pre-market gapper on the long-term chart. If you take a look, what's happening is that it's kind of a wedge setup on the long-term chart. So I had that PR to gap it over the breakout of the wedge. It is capable when it gets news. It went from 218 to 385, so that's $1.60 a share. So it's capable of making moves. So I figured if it broke out of this, maybe it surges up, starts to retest this 350 area. And I even thought it could be a really nice swing trade for a potential gap up in the morning. You never know what these stocks can do pre-market, just randomly, they'll just surge up. So I thought about swinging it. I decided not to because I had a very specific plan. Lately, these plays, for whatever reason, they've just been like, the ones that get hot, they just surge like $1 or $2 after hours. I'm not really sure why. I was really hoping, obviously, that Weasel would gap up, like just start surging up $1 a share after close. Didn't happen for me. It was just very clearly slow and weak, and I decided I would just sell it because I just was not willing to swing this overnight when it shows weakness after hours. So this is what I was looking at, this development, just a nice consolidation, right over VWAP basically all day. It's very choppy, but you know what? The TA's there, the structure's there, and I really felt, okay, it can curl, it can curl, and because it has a nice long-term chart that correlates with this nice intraday, it's strong enough, in my opinion, that I wanted to go for it. So I went ahead, I bought it right here, and when I say right here, I mean literally right there. Like I didn't buy it before. I thought, I almost bought this area right here, okay, almost bought it, but I missed it. I missed the entry by like a second or two, and once I saw that I missed it, I didn't pull the trigger. I was like, I don't know, I'm not gonna pull the trigger here. It came down, it looked kind of bad, but then it recovered, and then level 2, like a pretty strong bid came on level 2, and then I decided, okay, I'm gonna try to surge it. So I just scooped the entire 293, which was 5,000 shares. I surged into it, and then it gave me a nice little perk. Came down again. I stuck to my plan though. My plan was to risk 291. It held, it curled for me. And it wasn't fun when it started to come all the way back down. It came all the way back down to 295. That wasn't very fun, but I held again, just sticking to my plan. And it started to curl, and just 160,000 shares of volume surged into this, and I was feeling pretty good. I'm like, oh, this is sweet. It's probably going to surge up, maybe test 350. But no follow through really came from that, and it looked really good actually. Going into close, it kind of had this look where it's like, it's going to start to break out and test the highs again. And then after hours, it just did nothing, which was like super disappointing. And that's why I cut it around 309 area. So yeah, I mean, those are my two plays, Weeza and Seal. Basically my big two plays. I ended up making around 2,300 on the day. So that's going to do it for the recap and just random rambling. Not even sure why I rambled so much, but I guess the point I wanted to make from this video was I don't really know if strategy hurts or helps me, but my view on it is overall I don't think it matters that much, is kind of my thought process as a whole. Just because I am confident in myself, as far as I am confident I could adjust and find a new strategy if I had to, if for some reason it didn't work, or if I shared it to too many people and it stopped working. But like, I just don't think that that's the case, because the strategies that I play have been, they've been happening for decades. So it's not, this is more like human emotion. I don't think that human emotion is going to change anytime soon, because that's a biological scale thing. That I mean, if you're thinking about biological changes, that's hundreds of thousands of years, if not millions. So that's not changing anytime soon, and I'm pretty sure that's why it doesn't matter, because human psychology, that's not changing anytime soon. So yeah, so I had a lot of people reach out trying to book calls with me, because that is a service that I had in the past and I stopped doing it, mostly because I had a major burnout. But then I got to thinking, it's like, well, in the calls I let people record the call, so it's like I was making a personal video for them in real time. So I thought, why not just do the exact same hour call and film it? And if I film it, you know what, I can make it 2 hours or 3 hours of just like really good content going over things. But for the most part, those calls weren't that unique as far as the things I would go over. I had very specific plays, because each play that I went over kind of covered a specific example. And I would go over some recent stuff too, but for the most part, the calls were very similar to each other. So I could just record a video and sell that. It wouldn't be a real-time call though. So the personal factor kind of gets lost, which is unfortunate, but like it helps me avoid burnout. And if you think that that is a good option, let me know, and I suppose I could make that happen. It's so weird. I flip-flop so often on this topic. It's like I want to give out strat, and then the next day I don't. And then the next day I want to give out strat, and then the next day I don't. And it's like I talk to people about this all the time about how I don't want to give away strat, and then I'm like, I want to give away strat. It's so weird. I'm so flip-floppy on this topic. It's crazy. The thing that sucks though is once you give it away, you can't bottle it back up. You know what I mean? But at the same time, I think I just need to relax because, helping people is great. That's important to help people in general, and that makes me feel good. So, that's a factor that definitely adds to my life. So I shouldn't be so negative and closed off about it. But, at the same time, I'm not willing to give away strat for free. That I'm not willing to do. But overall, I think that it's a good net positive overall. It's kind of the conclusion I'm coming to. So yeah, I think I will make that video and see if I can make something a bit more complex. Maybe make a 2, 3, 4 hour video, kind of just going over a lot of the same stuff, but going over some other details as well. Showing as many examples as I can. I think that would be kind of cool. Yeah, that would probably be pretty cool. Okay, yeah, I think I'll just end the video there. Kind of a weird video for sure. I just wanted to get some things, talk about some things out loud, think about them a bit more. Also, talk about the fact that I am thinking about, instead of calls, have that video option. So you're really just buying a piece of content from me instead of booking a call. Look, the call thing was cool. I met a lot of great people, and I enjoyed all the calls that I did, and the feedback I got from it was amazing. I think I probably did 60, maybe 70. Nah, probably around 50 calls. Yeah, probably around 50 calls. And not one bit of bad feedback. Now, I don't really think that they would tell me to my face anyways if I did a bad job, but I feel pretty great about the calls. It was like a really good, successful thing. Helped a lot of people. Definitely a lot of people have very quick success. As far as maybe they were bleeding money and now all of a sudden they're a slight winner, and it's like, oh, that's pretty cool. They turn things around, and usually the people that get the most benefit from the calls that I've seen, it's the ones that really put in the work. So the ones that are grinding, I'm putting in the screen time to really take what I teach and then put their own spin on it, or just gain the screen time necessary to really take in the things that I say and apply them. Those are the people that do the best. Yeah, so it was a great experience. But going forward, I think that, it's just too time consuming to do calls. I trade full time. I don't want a second job. So, yeah, I'm just going to end up selling the content in a video format from now on. So look out for that. Yeah, and I think what I'll end up doing is I'll probably just make it so you can book a call like normal, but I'll make it very clear that it's not a live call, and then I'll just send the recorded video content. So it's very close to the same thing. And in the first time callers, for the most part, I talk 95, probably 98% of the time, just going over as many examples as I could to really get the most value for that amount of time. That's really what the calls were. It wasn't really too many specific questions unless people booked secondary calls, and then we would kind of chat about their their specific plays or just different things. But first time callers, it's all pretty uniform. Alright, well, thanks for watching the video, and I'll see you on the next one.